educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Louis. We're going to have, without doubt and without exception and without missing, Tim Bost of Financial Cycles Weekly will be our guest today at 12:30, not 9:30 as expected yesterday. My bad, boys and girls. Well, we know a couple things this week. I posted a chart for the DAX. I posted a chart for the FTSE. As you can see here, they made some type of a minor top, whatever it is. We also think we've made some type of a top in the S&P because we've dropped 100 handles in 2 days. Of course, we've rallied back 50 of that already today, so it doesn't take very long to prove that one wrong. And also, we think that the bond market has made some type of a minor bottom. We don't know whether it's a big bottom or a little bottom. All we do know is that it's some type of a bottom. We had that 3 drive to a bottom pattern. We're now trading up a full handle from where we were then. We got to 155.08 last night, and we backed off, of course, when the report came out today. So that may or may not move the market, but anything below 153 should cascade these things all the way down to 141. There is nobody that is friendly to the old Bondoskis here, folks. They just very, very few people have been able to decide that they want to be a buyer of bonds here. Even just a 382 rally on this, folks, would give a bond a 10-point rally. That would be, one heck of a rally. Now, something else that we know this week, and that is that the crude oil that we looked at, back there on March the 8th, about 10 days ago, has indeed made a major, oops, I hit the wrong crude oil number. I wanted to do the one that showed the 3 drives. Give me a second here, boys and girls. And what happened yesterday, folks, those of you that follow the Floor Traders Handbook stuff with the standard deviations, the crude oil made 2 standard deviations yesterday, folks, right down there at 58. So that should be a major bottom in the crude oil market. We've rallied 2 handles so far. So that should be a pretty good rally coming in here in the crude oil. And maybe it's a major bottom. I don't know whether they're major or whether they're minor. No one ever tells me that. I just look at the little charts and see what my risk is going to be and then, move on to that one. But those are the 3 major ones that we're paying close attention to. Also, the gold market is still pretty much right where we got out of it, right around the, it's about $7 higher at 1737. We're going to wait till next week in order to decide whether we're going to go long or short in this, but the bias right now is certainly to the long side. And we will be paying very, very close attention. But the 2 that really deserve the big attention are the stock market, because if we make a new high today in the S&P or Monday or Tuesday, if we make a new high, that tells me that this long-term pattern that I've looked at is really not valid anymore, because this has done everything that it could possibly do in order to make it look like it's going to work. Now, those of you that like ABCD formats, I know you probably are watching it here at the TFNN Den, but we have a beautiful ABCD forming up here at around 39.18 to 39.20. And if that's the case, that shouldn't get any higher than that on this rally. 39.30, 39.40 would be my highest guess, but there's a perfect ABCD coming in there at around that time. So I think it's something that you might want to just look at if you have an interest in going short, or if it fails, buying on the continuation that it's going to go up a long way. These are things we don't know, folks. So let's just move on here and talk about a couple of things that we've also been watching all week. I wanted to bring this chart to your attention here. This is the long-term monthly chart on Treasury bonds. This chart comes from our good friend Jim Bartolione. He's one of the 4 of the F-16 pilots that I trained. And you notice here that he is showing this long-term monthly. This goes back a long way, folks. It goes back about 20 years. And you can see here that we're setting right at that number. There's your 153 number in the Treasury bond. Well, that's TLT, but the Treasury bonds are the same thing. So this is major support, folks. That's basically what it is. And Jim looks at a lot of square roots of numbers because he's a big fan of Pythagoras and also, the Fibonacci summation sequence. So his work is very, very good and long term, of course, but it still has some applications as you look to see the addition to the shorter term time frames as they line up to tell you pretty much the same thing, that we're at the dance. The question is the fat lady going to play the orchestra tune that we want, or is she going to play something out of the works of Mozart and stuff that we don't follow too much, other than the Wedding March? We like our opening of the Wedding March, which is the theme of trading places. Okay, now any questions? 877-927-6648. We want to watch these markets closely. Folks, let me show you what we've been watching here in Apple. We've used this all week long. There's no reason to stop now. It's a great trading vehicle. You can see here earlier in the week, we hit the beautiful ABCD on the 60-minute chart, just spot on up there at 127. And then since that time, Apple has had a little rough time getting over the hump. As you look at it from a shorter time frame here over the last couple of days, you'll notice here that we did complete the ABCD pattern down from that 127 level at 120. But folks, you talk about a dead cat bounce. Not anything against dead cats, but that is that's a nasty one right there. And if Apple goes below 119 or 120 or 119, that's not very bullish, folks. I don't know where Apple's trading this morning. Somebody kind enough to tell me where Mr. Appel, who's down by the well, is trading. I would like to know, because below 120 is the first danger point, and below 119 is flashing red lights everywhere. So someone be kind enough to tell me that we're trading at 120. So it's below the number. See, 120 now, it's right there. It's spot on right now at the old 618. The 618 number is 1.2043, and Apple is at 1.2050. You can't make this up, folks. You cannot make it up. It's impossible to make it up. All right, let's move on to the next one that we want to pay attention to, and that is Elbito. Somebody has asked me questions about something that I know nothing about, so I'm going to make it up on the fly. Here is Bitcoin, folks. We had a 382 down there at 28,000. We rallied up to 60,000, backed off a little, 55,000, backed off to 40,000, and now we're back up to, we had 62, then we backed off to 54. It's a $64 question, folks, of whether we make that last one, because anything above 62 now has a price objective of 72. It's 72,000 if it does that. And also, if this ABCD is correct, you're going to go back down to 48,000, which will be a 61% retracement of the number at 44,000. Like I said many times, I have zero knowledge about this stuff. I just look at the charts. I don't know who owns them, what they're doing, how they're doing it, or anything like that. That's basically it. I got involved with Cardano when it was 6 cents, and we were fortunate enough to be during a live trading day way back in, I think it was September of last year, when it was 6 cents, and it's rallied up to $1.50. And that's a lot of money. $60 buying 1,000 shares at 6 cents is now worth quite a bit, folks. Just over $1,500. Hey, we'll be right back. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the opening call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the opening call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I'll personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I'm going to change strategy here just a little bit. I've been watching the stock of Google for several weeks now. This is a daily chart, as you can see here, since February. And all of March, we have been at this tight trading range, quantified by that box that you see. Folks, if you were to do this on a weekly chart or a monthly chart, most of these are continuation. Mine, of course, is. But there's a big gap there. And that is a pattern known in candlestick parameters of the two black crows. There can also be three black crows. On this one, I think there's probably 2.5 crows. But what this means is the low today in Google was at 2017. Now, if we close below 2017 and just right at 20, you'd like to see it close between 2017 and 2020. And what you would do here on a Friday is you would buy a put on Google. A May put is what I would do. You don't have to, I want to do, you could do April, but that's, you could do April too. Because what you have to do is, Bill says it's two crows and a parakeet. I think that's probably pretty close to it, Bill. Anyway, the strategy here would be you have to gap down on Monday morning. And if it did, it would leave an island reversal over 2 weeks. Over 2 months. And that would mean that everybody that had bought Google in the last 2 months is at a loss. Most of them are already at a loss because we're already at 2045 after hitting 2017 today. So the theory behind that is that once they get trapped up there and the market should gap down, that would be a very, very ominous sign, and I would do that. I don't ordinarily like to do puts and calls because you learn to be a option seller. 85% of the people that buy the options lose, that means the people that sell those options to them are winning. If you ever go into the Chicago Board Options Exchange, they always have their little badges on. Sell an option, buy a Mercedes. Whether it's a put or a call, they're the one that's giving it to you, because the rules say, and that's what the statistics say, that 85% of option buyers don't do very well. The 15% that do well do okay, but most of them don't. So remind yourself, you want to be an option seller or an option buyer. That means you can't take a calculated risk, and that's what this is. The only reason I say this is because, Google is a $2,000 stock, so you'd have to do it with Robinhood if you're going to do it with the stocks. That would be the easiest way to do it. But anyway, if it happens, we will watch the pattern and see how it unfolds. And that's the bottom line of what we want to be watching here today. So I hope that helps in how I described it. I'm just giving you an idea. I'm not going to be doing it myself because I don't do anything in stocks. So those are just some of the things that I'm looking at. And we already know that the NASDAQ has not broken above any of those highs that we talked about. So I think it's something that we have to pay attention to. Now, another one that we talked about this week, and we went right down to it yesterday, was the natural gas. We went all the way down, and we hit that spot on 78% level at 151. We've been able to rally about 10 handles since that time. So that is a very, very key, important support that you do not want to go below that, because below that, the next area is down about another 10 to 20 handles. And believe me, natural gas can cover that very quickly. How's gold? It's bright. It's shiny. It's something that everybody likes to own. I am standing aside in the gold market until over the weekend. I believe that we're going to get down. We could get as high as 1761, 62 on this run here, but I believe we want to be able to see it pull back one more time to around 1705. Or maybe a little bit higher, but I'm going to be buying it probably on Monday or Tuesday of next week. But we're going to stand aside. Frankly, folks, I'm just I get so many questions about the gold because we've been very fortunate this past week. We bought it when it hit that 382 at 1673. We bought it at 77. The market rallied up to 40. We sold it. We bought it back at 05, and then we sold it again at 30. I mean, we took 75 points out of a move that only went 80 points. So that's about the best I can do. So all I'm waiting now is for a nice little ABCD to tell me that, hey, take a look at me, I'm ABCD, and that's what you like to try to do, folks. Follow the rules and don't let the rules follow you. There used to be a little plastic phrase on my on our refrigerator at Westlake Village when I was at Drexel, and it said, "The man who owns the gold makes the rules." And I think it was by Socrates or something like that, one of those smart dudes from way back in those years. All right, folks, the euro is still has goals of trying to go a little bit higher. It's having a rough time right now. I am still very, very bullish the U.S. dollar. If you take a look at this U.S. dollar, there is absolutely no way that you can be bearish this U.S. dollar looking at this, because we went down to the 382 retracement. It took just about 10 days to get there. And folks, that is a bullish pattern. And now if we get below that 91.20, which means the euro would get above 120, that would change the whole scenario. But right now, that dollar index flat does not look bearish, folks. It's made a major bottom down there at 89.10, as we sort of expected it would. We had a nice rally up and pull back right at the 786, made the ABCD, and then it backed off to 50% and said, hey, I've stopped going down, boys and girls. And so this dollar index flat does not look bearish to me. That's the way it looks. So I hope that helps as you look through these things. We're going to have Tim Bost as our guest on here in about 16 minutes, so don't miss the show, folks. I had the date wrong yesterday, and he's got some great slides to show you where he thinks these things are going to go, and he has been extremely accurate. Made a few mistakes along the way, but we don't count that because we make mistakes all the time. The good news is we try to correct them as soon as we can. We got a really nice chart from one of our friends across the pond, in fact, way across the pond, over there in Scotland. And you'll notice here, this is the Dow Jones weekly chart. looking pretty much like the one we were watching. As you can see here, this is the Andrews pitchfork material. It also is including the 5-point expanding reverse wave done by Wells Wilder. It's also known as the T6 pattern in Gartley's book. And you can see the 1, 2, 3, 4, 5 expanding triangles. And there is point D up there when the Dow Jones was just tad under 30,000. And I believe it hit 30,000 as a spot. And now we're going to see what happens. It looked like today the end of the world was going to happen with the Dow down almost 400 points. But it was greatly undervalued and the people came in buying it. But today's close is what's going to happen. If it closes really strong, this could have been a major bottom today, folks, because we went over 100 handles lower in the exactly 100 handle lowers in the S&P. That's a lot of money, folks. That's equivalent to 500 Dow points. The Dow Jones didn't drop that much. It only dropped about 350 because it's been the leader. The Russell did, but not that. So that's it. So we'll be watching it. The pitchfork. Terry's asking me to explain the pitchfork. The pitchfork is nothing more than the splitting the range and see how far, how many standard deviations it goes above or below the middle line. If you go online, Terry, look for Alan Andrews pitchforks and you'll find some information on it. Copy that. 877-927-6648.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
By way of Sarasota, Florida, we have Tim Bost in the house. Tim,
hello,
how are you
sir.
today?
How are you today?
Living the dream on the green side of the grass, my friend.
That's what we want to be doing. That's a good thing.
You say that there's something is on the way. The market is shifting gears. Are we going from second to third, or are we going into reverse, Tim? What's it going to be?
Good question. Good question. Every time we shift gears, we have to hit that clutch, right?
You got it.
We don't really know for sure. Right now, we're in neutral.
Okay.
No, we've got a couple of events coming up here in the next few days that typically have an impact on the markets, and the fact that they're combining, I think, gives it kind of a double whammy effect. So let's take a look at that. The first thing, of course, is we're moving into the change of seasons. We have the Aries equinox coming up tomorrow, in fact, on Saturday the 20th of March. And this is an annual event. In the Northern Hemisphere, it's the first day of spring. For our friends down under, it's the first day of autumn, but it is the time that the sun moves into Aries each year. And it's a seasonal shift that traditionally signals some potential action in the markets. It was something that W.D. Gann liked to follow very, very closely, and he tracked it on a regular basis and pointed it out as one of those times each year when we should be paying attention to the market dynamics. He put it in his famous Gann wheels and some of his trading charts as well, indications of when that would occur. And so it's an annual inflection point that can really command attention for all markets, but it impacts different markets in different ways. So we'll take a look at it here in a couple of minutes with a couple of examples with that. What's interesting is that we also have one of our funny old trans-Neptunian trends getting into the mix here. So in the early hours of Monday morning, New York time, about 3 a.m. or so, we'll have the trans-Neptunian factor Hades making a direct station. It spends a lot of time in retrograde motion, and it'll be heading back forward. And so as it does so, it pauses and shifts the dynamics a little bit. It's that kind of changing gears phenomenon here that we were talking about a moment ago. So it's more or less in neutral and stationary, which kind of strengthens its impact from an astrological perspective. Now, this is one of the trans-Neptunians, so we've talked about those on previous occasions. We're dealing with Kuiper belt objects way outside the orbit of Pluto, so it's a very, very slow-moving factor. It has an orbital period of about 361 years, so it's not something that we get frequent changes with. But with Hades in particular, we're talking about concepts of social strain and specifically economic strain. So even though the markets may be booming, there are still underlying economic issues that are kind of nagging and uncertain, and a lot of recovering to do yet from the pandemic and all of its continuing after effects. That's part of what we're looking at there. And the whole idea with Hades is that things can't get worse. You experience kind of the worst of the worst with that particular dynamic there. So that's what we've got coming up here over the next couple of days. That will be taking place on Monday morning in the early morning hours there with the Hades direct station. So we've got an interesting weekend ahead.
Tim, can I ask a question?
Absolutely.
When you say the early morning hours of Sunday morning, I understand that part. But what happens is this thing, the markets are going to be closed Sunday morning. Of course, they don't open until Sunday evening. Will that effect be over by the time we start trading on Sunday evening, or when does it really start to shift?
That's a really great question, Larry. Thank you for that, because this is something that happens. We'll get various planetary phenomena that will occur during those times, especially on that weekend break when the markets are closed. And the question is, when do they have an impact? It depends on the strength of the astrological dynamic, and we're talking about fairly slow-moving factors here, which means that they kind of build up a lot of strength. And so we may begin to see an impact of this as early as today on Friday, and it can carry over well into Monday as well. So that over period there is definitely potentially impacted by this. But in my practice, don't try to call it one way or the other. We just get ready for it on both ends of the spectrum there.
There you go. I like that idea. Now you've got a picture.
It's the old Boy
here.
Scout thing, right?
Yeah, well, when in doubt, use two different variables. Hey, here's one here that's interesting here. When you're looking at this thing with the S&P here, with the Aries and Equinox, we have this spring equinox coming up here, and I know that's important because that was in Dr. Lowe's book, the new techniques of trading, and he said the first technicians were astrologers going back to the Sumerians and Babylonians because they would, trade wheat and corn, based on the phases of the moon. So that stuff has been going on for 6,000-7,000 years. But what are you looking at here when you're watching this equinox happening and then the Aries? Explain to the folks what you're looking at here.
So the Aries equinox, there are four cardinal points during the course of the year. And those are the beginning of the four seasons of the year. We got spring, summer, fall, and winter. The summer and winter dynamic, we have the solstices, and then the spring and the fall we have the equinoxes. And the equinoxes represent those times when we have the same amount of daylight hours as the same number of darkness hours in the course of a day. That only happens twice a year in the spring and in the fall. So that's what's coming up here in a couple of days. We call it the Aries equinox to kind of be gender neutral, maybe, because in the northern hemisphere, this is the first day of spring. In the southern hemisphere, this is the first day of fall. But what is happening is that the sun, from our perspective, is moving into the zodiacal sign of Aries, and that's what marks that first day of spring in the northern hemisphere. The other side of the spectrum, in September, we get the fall equinox in the northern hemisphere, spring equinox below the horizon there, or in the southern hemisphere, and then that's when the sun moves into Libra. So we're calling this the Aries equinox, and it's simply a point in time. And we can go back and back test it with the S&P. That's what we've done with this chart here. So we're looking at roughly 30 days before, 30 days afterwards. And the little trend line there that we've got graphed out on the chart is an average of how the S&P has responded over the last 60-odd years that we've had trading history for the S&P before and after this particular astrological phenomenon, which happens once a year. So we've got pretty good statistical data. And what we can see is for the month moving into that, we're in pretty much a choppy pattern. We can hit highs, have pullbacks, but it's essentially congested trading. And that remains the case until about 10, 12 days after that period. So the 0 point in the middle is the date, which is coming up tomorrow. These are calendar days we're calibrating, not trading days. And so on the left of that 0, we have the minus numbers, which are the preceding month, and then the following month on the right side. So we're looking about 10 days after this for a nice move to the upside based on this phenomenon. Now, what we're tracking here.
Time out.
Okay.
We got two questions in the den. They want
I'll catch my breath.
They're going to need it because they got the noose out. They want a specific date. You've given them one, which is tomorrow. You can't trade on Saturday. Let's take a break here, and we'll be right back. 877 Tim Bost, folks. Financial Cycles Week.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, we're back, folks. We're talking with Tim Bost, Financial Cycles Weekly, and we have him on the Hangman's Noose. We're asking him for the 2 days that are going to be coming up. One of them, I guess, is since we can't trade tomorrow, we'll have to figure it as Monday, right?
Right. Actually, I'm looking on the basis of this action that we have combining here, a potential trading low coming in on Tuesday, which will be the 23rd. And what I'm looking at is taking a long position at the close on Tuesday there. And what we're anticipating is a potential run-up. And one thing that's important to be aware of here is the scale at the left side of this chart. We're talking about a nice move up that accounts for about 1.2% increase. So, we're not looking for, a 15% move up in the S&P or something like that, but it's certainly tradable. Okay. And we're looking for that move to hold out until about the end of the second week in April, looking at that time frame between Friday, April 9th and Tuesday, April 13th as a potential peak for that move.
Okay, that makes very good sense. Now, Tim, if something happened that this doesn't work, we want to wish you the best, and I hope you can find someone else that'll have you on as a guest. But we've enjoyed having you for 4 or 5 years. But, we only have to deal with winners here. And so if you have a loser, we have to move on. You understand that fully, correct?
I totally understand that. So if you'll allow me a little place where I can put out my tin cup by your door.
Yeah, I have several tin cups. I have several. I've been living off those tin cups for years. Anyway, we know that's all probability based. You got to use risk control. But
you've done really well. Specific probability, because we also have this Hades direct station that we mentioned earlier, and that's coming up on Monday here. And here we've done a little bit of a calculation based on that, which is an even stronger potential impact on the S&P. And in this case, we're looking for a move of about a little over 2.5%, 2.65%, and the 0 point on this chart is for Monday rather than for Saturday. And we can see a potential entry point coming in right around that time frame based on that Hades station. So entry on Monday would not necessarily be ruled out, although I'm preferring Tuesday as a potential entry point for the S&P there. But we've got a 71% probability based on our back testing of that kind of gain of a little over 2.5% by the 13th of April, which would be, a couple of weeks duration on that trade. So we're looking at swing trading here and not necessarily epoch-making rally kind of thing.
Okay, now we have another question from one of our listeners in Tucson, Arizona, LP, whoever that is, and that is, how do you stand on your standings now that the market timing is stopped? Are you using a different service, and how are you doing so far this year as far as your overall?
Yeah, we're doing pretty well so far this year, but I really miss Timer Digest because of their ability to compare to what everybody else is doing. And so yes. I've not found another service that does the same kind of thing. Basically, we have our subscribers to our newsletter and our members here and send them out a copy every week of what we're doing year to date in managing our model portfolio. But we've been doing pretty well with our forecasting work as well. So don't have those hard numbers to brag about like we used to get, but we'll rest on our laurels there. How's that one?
Sure, sure. Now, this is a chart of the S&P 500. It's up 83.74 since January 1st. It's up that much?
No, this is not the
this is Bitcoin.
We have just changed gears here.
Yes.
Right.
Oh, well, this is true,
okay.
right? I just went into overdrive.
This is the crazy man's market, my friend.
I just went into overdrive, so go ahead.
Right. No, we've seen a remarkable run up, and we've been having these conversations about Bitcoin going back a while, but we certainly got a little more interested. I believe it was in mid-December that I forecast we could see Bitcoin hit over 100,000, which seemed completely insane at the time, but it's looking more and more realistic as we move ahead. So we're not there yet, but we're remaining bullish for the long term here. Of course, a week ago today, intraday, we had that record high of $61,683, and it pulled back a little bit, since then, and so we, continue to deal with this as if it's a real market. It tests resistance and backs off and so forth. Let's see, right now it's looking at about $58,988, something like a little below $59,000 at this point, and that's
Tim,
one of those resistance zones.
We have another question from that fellow out in Arizona.
Okay.
Now, tell Tim, be honest with me on this. Well, you're always honest. That's a silly question. Do you understand what the heck it is, what Bitcoin actually is?
I know a lot more than I did a few years ago.
Well, that means we still know nothing. Tell me what it means. I mean, can you explain to the folks in nickel dime terms that what it really is? That when people are buying Bitcoin,
right.
what are they getting?
There are two big pictures to it. One is as we look at it as a trading vehicle, it is highly speculative. It is extraordinarily volatile. And it is extraordinarily dangerous as a trading vehicle. However, my personal belief and understanding is that it has a lot of viability as an alternative means of transaction, as essentially an alternative currency. And the intrinsic value is built into the fact that even though it's electronically generated, the total amount of Bitcoin is limited to 21 million Bitcoin. Right now, we're at about 19 million that have been mined in the terminology there, which means we don't have the total amount in circulation yet, but that is finite, and based on the demand for it, that when we hit that finite amount, I'm expecting a huge surge in the price based on supply and demand. The supply will tighten up there at that point. We're going to be making any more. It turns into something like real estate.
Can I ask a question? Who decides it's only going to be 21 million? Is there a Bitcoin judge or something?
That was built into the original formula back in. It was a couple of weeks after the crash of Lehman and the beginning of the big fallout at the end of 2008 that this paper was published proposing this new kind of digital currency. And when they set that up, it was designed to be limited to exactly that amount. at that time. And so that's kind of hardwired into the mix with it. There's no board of arbiters or anything. That's intrinsic in the structure.
Well, that's what I wanted to know.
There's a lot to explore there, but it's really, really interesting stuff. And, of course, what we're doing here is taking a look at some of these same factors that we were just using for the S&P. And when we look at the Aries equinox here with Bitcoin, what we're seeing here is that, again, that 0 point is the coming up on Saturday. And we're looking here for a move upward starting about 10 days or 12 days, something like that, after that with Bitcoin. Now, check the little scale on the left-hand side of the chart there, and you can see that this price move we're looking at is not 1.2% like we saw for the S&P, but 30% on average.
Wow. Shut the front door. Stay with us, my friend. We want to hear about your next webinar coming up.
Okay.
Tim Bost, folks, Financial Cycles Weekly. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Tim Bost, Financial Cycles Weekly. Do you have any webinars coming up?
I do indeed. And we've got one coming up here next couple of days. You can get access by going to bit.ly/Tim Larry P, capital T, capital L, capital P, and everything else is lowercase. That will get you to a link that will get you a special invitation for Larry's guests in particular to join our session. look forward to having you join us.
Okay, what I'd also like to do is I'd like to schedule you about 2 weeks out so that we'll see how these predictions turned out and whether you're going to be a continued guest, which you will be no matter what happens. I already got
that happen.
I already got 2 private messages say I don't care if he's wrong all the time. He's got some great information, so you're not wrong. You're right a great deal of the time.
We try to keep people entertained anyway here. So.
Yeah, well, that's for sure. Hey, thanks for joining us today, my friend. It's been a really great session with you, and we'll have you on in about 10 days, and we'll see how these markets.
Always a pleasure, and we'll get in touch for a specific date there and get that worked out and let all our friends know. Okay?
You bet. Folks, remember we had some major stuff happen this week, so let's not lose sight of the ball where it's bouncing in the courts. We think the bonds have bottomed down there at that 153 level. We're trading around 154.15 right now. Don't know where they're going to close. We've been down 100 handles in the S&P. We rallied back about 50 of that already. So the close today is going to be very important. If we make new highs sometime next week, that means to tell us that this big pattern that we're looking at on that expanding wave could be wrong. But we'll have more information, of course, next week when we go through this weekend, and we'll see whether this thing happens on Sunday night with that Tim just talked about will be interesting to watch also. But remember one thing, folks, live every day in an attitude of gratitude, and may God bless. And please help your neighbors out. There's some folks out there in bed. May God bless, folks.